Good afternoon, everybody. Today is Friday, the 19th of December, 2014, and this is Brian Shannon from alphatrends.net. Hope everybody had a good week of trading. We started out on a weak note, and we'll take a look at what happened since then. But obviously, the market did close with a gain of 2.8% for the S&P 500. Keep in mind also that the numbers that I put on this table are only price. They don't include the dividend. And today, the S&P 500 paid a dividend of $1.13, so it was actually better than that. The Russell 2000 gained 3.6%, and semiconductors up nicely, as were financials, pretty much across the board. We had oil up very slightly here, but gold was the bigger loser this week. So let's look to the charts and make some sense of this market. Last week, in last Friday's video, I said, we're guilty till proven innocent, as we are below a declining 5-day moving average, and that I thought, perhaps we would have the opportunity for this market to turn back higher. And I'd mentioned that, I didn't see it happening till at least Wednesday. Well, it was actually Thursday with that gap higher where we got back above that 5-day moving average, and we are now once again innocent till proven guilty. I think that you have to look at go back and look at what we have been looking at, and we've been looking at things like the volume weighted average price since the low in October, and we came down right towards that area. That's about where we found support. If we also look at the Fibonacci level that we were mentioning, the 38.2% retracement was hit right there at about 198.5, and it was also the 150-day moving average. None of those by themselves made it a buy, but it becomes a buy after those key levels are tested, and then the buyers regain control. For the NASDAQ, we obviously had strength there as well, and this market gapped back above its rising its 5-day moving average, which is now rising. And what we'll look for in here is kind of the same thing. If we look back at the levels where this market found support, the NASDAQ came down to about the 38.2% retracement. If we look at the volume weighted average price from the October low, that also became a very important level here as this market closed the gap near that 100 level, and we came down below that rising 50-day moving average. So we are back in control by the buyers. Next week, what we'll want to see hold is 102.50 to 103. That's going to be our key level of support. Historically, next week is a positive week, so we'll want to see this hold as support, but we'll give the market, continue to give the market the benefit of the doubt to the buyers. The Russell 2000, we spoke about a couple months ago about from failed moves come fast moves with this failed breakdown right here, and then I had pointed it out on Twitter, on StockTwits, that we kind of had pretty much the identical type of pattern where we had this uptrend, it turned sideways, and then went lower here. This is just over the, since the October low, this is what's known as a fractal, basically the same pattern repeating within the pattern. So this pattern here of the failed breakdown was very similar to this pattern where we had this rally, it turned sideways, broke down, and now we are once again from that failed breakdown came this fast move higher, and the Russell 2000 for its part came out to new highs here today, not for the year, but obviously since the summer at least, and it does still look like it has the ability to be able to continue to move higher. So the buyers remain in control there. I think the key level we would want to see hold initially would be about 117 to 117.5 next week. If we get a pullback in towards that level, that's about as low as I'd like to see it go and still have the benefit of the doubt to the buyers. Semiconductors also got back above their 5-day moving average and broke that pattern of lower highs and lower lows. This market didn't pull back as deeply as some of the other markets. You can see the volume weighted average price from the October low and the Fibonacci, neither one of these were hit, nor was that 50-day moving average. So it seemed like 52 to 52.25 should have been the key level for this market to hold, to find support on the pullback, as it was also prior resistance. But instead, the buyers came in and took control earlier than that on Thursday with that gap higher. Financials also obviously recovered here. We've got a little bit of potential resistance at 24.85 to 24.90, and maybe we pull back. I'd like to see $24.30 to $24.40 hold. As long as we can hold above that, again, it's innocent till proven guilty. And getting back above 24.90, 24.95, I think we could see this market continue on to new highs next week. Now, for some of the other markets, gold this week had lost some ground, as I mentioned. The worst performer, down 2.5% or so. I still think we have that possibility that here is from a failed breakdown here could come a bigger move higher in gold. As I mentioned, I don't trade gold because of these gaps every single day, and I just don't think it makes sense generally for me. I would say if you're long gold, your stop probably should go at about 113.30 or so. Bonds had a good week also. They actually, let's see what the actual number was there. The bonds were up slightly, not for the week though. They were down 0.32%, but still clearly very much in a strong uptrend here. Nothing suggesting, I'm sure there's some people calling this a double top, which is just dumb because that's not what a double top is. We only know well after the fact what the double top is, but it would be considered a completion of a double top way down here at 118. So don't listen to the double top calls. Instead, look at this market and say, hey, we're back below a 5-day moving average. That means a little bit cautious. If we can regain the footing here, then you would expect that the market should be able to continue to move higher. Apple, for its part, found some support. It broke down below this prior resistance, broke down below the 50-day moving average. And what we saw on Thursday was that we gapped up above that 5-day moving average. So this is the first time we've been above that 5-day moving average since early December. And now we have to look at this market and say what's most likely. Well, it seems like maybe it could pull back a little bit further. I would say the worst case I would like to see it pull back to is about 110 to 110.5. If it begins to pull back a little bit there, I would start to monitor this stock for a long trade going into next week. And I think that now the buyers are back in control. We may have a little bit of trouble with this 20-day moving average, but I think that Apple should be able to continue to move higher. And if I were, I would say a worst case stop probably down at about 109.5 or so. Alibaba we spoke about last week, saying that if it could get back above that 107.50 to 108, that it should be able to continue to move higher. I would say a worst case stop if you're in it would be break even. It does look like it has the ability to continue to move higher after finding support on that volume weighted average price since the IPO. We had mentioned that as it happened 2 weeks ago. We also mentioned that GoPro had failed at its volume-weighted average price year to date, and because it was below the declining 10, 20, and 50-day moving average, it was guilty till proven innocent. To forget about the stories about how many GoPros they're selling this holiday season, that price action is the only thing that pays. We did have the market above the 5-day moving average very briefly here, but that was a gap higher. You don't chase those gaps, and the 5-day moving average was heading lower. So there's still no reason to be long shares of GoPro. The path of least resistance is lower in there, and we're just, the best thing to do is to avoid it. Forget about the story for now and wait for price action to tell you when to get involved. We spoke about LinkedIn trying to hold that 50-day moving average support, and that it looked like it could get going again near about that 214 level, I think it was. So anyway, 224 maybe is what I meant to say. Anyways, good week for LinkedIn. I'd say if you're in it, stop near 230 or so. INFN did get going in here as well. It broke these little highs here that we spoke about. In fact, I spoke about 1440 to 1450 being the level that it needed to clear to get some momentum. So as I mentioned, I'm still long some calls in this stock. I think it's got a great looking weekly and monthly chart. It's got a good big short position and good fundamentals. So I would say in INFN, a worst case stop would, for my calls, I'm probably going to give it down to below 15 for the stock, about 15.20. Now, some other ideas to keep an eye on. Actually, let's take a look at oil first, because obviously oil is front and center on everyone's mind here. Last week, we saw that oil closed at $57.54. So we were up about 50 cents in oil for the week. This is a chart that shows 4-hour increments. So each one of these candles represents 4 hours. It's still clearly in a downtrend. Best case you could say is it's trying to find some support. Maybe it gets a little bit of action above $59 a share. It's interesting to hear the commentary about the shorts getting squeezed as it gets this rally. And certainly, I'm sure there were some shorts being squeezed, but the path of least resistance in oil is still clearly lower. Here's the daily chart. There is nothing to suggest that the shorts have anything to panic about right now, except maybe some of the latecomers who are adding on at lower prices. But oil is still clearly in a downtrend, and if you're going to be trying to buy oil, keep in mind that these sell-offs can be be very strong and last quite a while. The last big sell-off in 2008, we saw it go from 145 down to 35. So it lost $100 a barrel. There's no such thing as down too much when there's still sellers in the market. So be very careful with bottom fishing in there. It's very difficult to do, obviously. Excuse me. Some names for next week, I think, to keep an eye on would include eBay. eBay's knocking at these highs right up here close to the highs for the year, and it's in a longer-term uptrend. It seems as though it should be able to continue to move higher, perhaps clearing back above 57.50, 57.60, and I would say a stop would probably go down at about $56.90 if you do get involved in eBay. That there's not a whole lot of reason to risk more than that. What we want to see is a higher high, and then protect ourselves with a stop underneath the most recent relevant higher low. And it seems as though it should be able to continue to move higher. I also like the way Green Mountain Coffee Roasters is setting up. You can see, maybe we get a bounce up towards that 50-day moving average. The longer-term trend is still clearly higher on the weekly time frame. We've experienced a setback in here, and it's looking like here's a left shoulder, here's a head, here's a right shoulder, and if you draw the neckline across that, then perhaps getting back above, I'd say, probably back above this week's high, near about 139-ish, back above that level, that perhaps it could be able to continue to move higher. So I would be watching for a move beyond this, the highs of this week, 139-ish, and I would say in this case you'd have to risk to about 136.5 or so maybe 2.5 points, which sounds like a big stop, but realistically, when you look at the dollar price of the stock, it's not a whole lot of risk. Google is another stock that's kind of curious to me because it's clearly in a downtrend here, but very similar to some of these other moves. What we often see is that we get stops underneath an important low, and then if the stock can recover back up above that, then I think that Google could get a pretty good squeeze higher from here. So I'm not really sure where I would buy it yet, or if I'm going to, but it definitely has that look of, from a failed breakdown, it broke this support. We have the potential for a fast move higher, perhaps up towards the 50-day moving average near about 542 or so. So I would say keep an eye on this one. You don't want to chase it. That is, it just ran from 510 here today, a low of 510 to 520. So you don't want to buy after it's up 10 points. But instead, next week, let's look for it to pull back towards that 5-day moving average. And if it can hold up above 508, 509, then it has the possibility that we are going to squeeze the shorts who are involved in that one. Intel's another big name that's looking like it has room to run. Clearly, nice uptrend on the weekly time frame. We can see we've had these, prior resistance holding a support, prior resistance holding a support. It's above all the rising moving averages. And we saw that it gapped up on Thursday, pulled back to the 5-day moving average, so that's nice to see. And then what I want to look at is the 2-day volume weighted average price. So what's the average price that people purchased since that gap higher? Well, here we see it's about $36.70. So I'd say for Monday, keep an eye on about that $36.70 level. If it can get back above there, maybe take a little nibble with a stop underneath today's low, and then perhaps add to it above $37.05. Last one I'll say to look at would be Yahoo, which looks, it holds up really well up here also, looking like a real high, tight flag up in this area. It's breaking a little bit of resistance from the last week and a half, 2 weeks, and now I think getting back above today's high near 51.50, 51.47, that it should be able to continue to move higher, and a worst case stop would go at about $50.85. If you're not in next week, I hope you have a good holiday. Merry Christmas to you who celebrated, and I will talk to you next week. Thank you.